Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu, and on today's show, we welcome back Ross Beaty, who's the founder and chairman of Pan American Silver and chairman of Equinox Gold. How are you today, Ross?
I'm well, thank you.
Let's begin by talking about your early career, and let's go back to what a young Ross Beaty was like. Were you always entrepreneurial in your 20s when you were first starting out? And what were your goals, if you had any, back in your early 20s? What were you like back then as a young person?
Well, who knows what I was like? You have to ask other people, but I know to my mother I was insufferable. I was always, fairly hyperactive and running around a lot and trying to get into things, and I was a joiner, so I joined everything under the sun, and I was just a busy little bugger. In my 20s, I was, of course, out of the house, and but not dissimilar to my earlier years. I was active. I spent a few years at UBC doing geology. Then I took a year off and traveled to South America, climbing mountains and traveling through all kinds of countries, mostly by hitchhiking. And that was about a year, another 4 months in South Africa, back home for my fourth year in geology, and then to London for a year, to the Royal School of Mines for a master's, and then off to Asia for a year, hitchhiking through Asia with one set of clothes and a backpack, and really all the way through Asia, right through to Japan, and then back home. And I spent a few years in law school as a hobby, and then I kind of got into the work world in 1980. That was my the 70s were study years, and the 80s I started to get serious about working.
Okay, and you've had a lot of success as an investor and as a company builder within the mining industry. So when you first started to build Pan American Silver, talk to us about the challenges of building something from nothing, especially in a market that was completely unloved back then, and why build a company when you could have had an easier time and just invested in a company?
Oh, well, of course, I had no money in those days, so I couldn't invest in anything. My first public company was Equinox Resources, and that started in 1985. I had a little contract geology company before that I'd started, but basically I was just an entrepreneur from the get-go. I was never cut out to be an employee. I'm very impatient, and it's just not my personality. So I always wanted to work for myself. I had a field that I could do that in geology, selling projects, and then I moved into the public company arena, lucky enough to be in Vancouver when I was young, and the Vancouver Stock Exchange allowed public companies to be set up with almost no money and very, very light regulations. It was a kind of a Wild West in those days. But I spent 9 years in that first company. I made all kinds of mistakes. It was a complete learning experience. I had no mentor, nobody to show me how to do things right. And 9 years later, and a lot of errors and a fair bit of good fortune as well, I was lucky enough to have the company bought by a Hecla mining company. And I turned my mind to starting a new company, and I decided to build a silver company because I was impressed with the fact at that time there were no real silver companies in the public market, and I thought it would embrace a new, clean, focused company. And so we started out in 94, and we built a pretty successful company over the years. But for sure, it was never easy. I'm not sure it's ever easy. I think there's always challenges. In some periods, it is a little more easy if you get your timing right. But it's if you're trying to build a long-term business, you have to think long-term and go with the cycle. Some good, some bad. Just live through the bad and make hay when the sun shines in the good.
Well, let's talk a little bit about the good times today in regards to Equinox Gold buying Lear Gold, and talk to us about why this perhaps was the right time to make this kind of transaction from your perspective. Your sense of good timing has played a key role within a lot of your success, Ross. So talk to us about why this transaction is important.
Well, it's a great deal of fun to be lucky enough to be able to build these companies, and I'm a big believer in cycles. I'm not a doctrinaire silver or gold bull particularly, but I'm a great believer in cycles. And when you see markets like we had in, 2015, 16, 17, and all the stuff that's going on in the macro environment in the world, it just seemed to me a very, very powerful set of circumstances from the standpoint of the gold price. And so I view the gold prices as being in a secular bull market right now for all manner of reasons. And so in that environment, I also looked at the equities, the gold equities, and felt that there was a great opportunity for kind of a roll-up, kind of a consolidation play. There were lots of junior gold companies that had good assets, even good mines, trading at very low prices. It's just where the market is today. It doesn't favor small scale. And these companies were trading at low multiples and low premiums, or low multiples. And so it seemed to me that if we could build a gold company at scale, it would work. And if we could do it at the same time as you had this equity disconnect, but a fairly robust environment for gold prices, it would be an opportunity to really build some value, as opposed to just getting bigger for bigger sake. Now, you have to remember, I was running a renewable energy business actually for about 10 years between 2007 and 2017. And that business, we had an offer to sell it, and we took the offer in 2017. So I exited that business and was sort of ready for one last company. I think I've had 15 in my career now. And I'm ready to pack it in, one of these years. But I thought, well, let's have one last run, and let's name the company after my first company to make a kind of a historic set of parentheses on my career. And work with a really great team of guys and women, and start with a good solid asset base of a couple of development plays. A project in California called Castle Mountain, owned by Newcastle. We put that together with a project in Brazil called Arizona, run by Trek Mining. Combined them in a little cash shell that I had, and we've started with a couple of development plays and a big idea, a big dream of going big. And that was right at the start of 2018. So we're only 2 years old now. We've had 2 full years, 2018, 2019. And I'm in a hurry. I don't want to take 25 years to build Equinox Gold. I'm in a hurry. I want to take advantage of the current strong gold fundamentals and this disconnect in the market. It's not going to be here forever. It's here now. And so we were in a rush last year and the year before to really build scale. And I think we've delivered pretty well. The combination between Equinox and Leagold in the fall last year that was announced in December took about 6 months to put together, and it'll close sometime in mid-February this year. But that really is, the last of about 4 or 5 different corporate steps to get big, and probably not the last either. So we're doing well. The market's embraced our mission. And I'm very, very gratified to see that response. It certainly is reflective of how I think the world is today, as opposed to what it was like, say, 10 years ago or 20 years ago. It's a different market today, and for all kinds of reasons. And you just have to go with the times. You have to build something that was reflective of the equity markets, the macro markets, the cash available, and so on. And I think we've done that.
So let's talk a little bit about the gold price in a bit more detail. It looks very constructive going forward. And since the price broke out from last summer from the $1,300 area, there is still a lot of disbelief that this is actually a bull market for the precious metals. So what is needed for a bull market to really gain momentum and for the mainstream investor to step in? And is a mania in the juniors like we had in the late 70s perhaps on the way eventually?
Well, that's a set of big questions. I think that the bear market that extended from 2011 to the end of 2015 was actually just 4 years, but it drove gold prices right down to 1050, and it drove kind of sentiment in the space to very, very low levels. So there was a real blowout in December 2015, and then in January 2016, the gold price started heading up again, and it broke out. And it went up to about 1250, I think, or 1300 before it kind of ran out of gas. And other things were going on in the macro markets as well that were sucking wind out of you could say the gold space, but especially the gold equity space. And, those things were things like cryptocurrency mania and the marijuana or the cannabis mania. And that was taking a lot of money out of the juniors especially. And so their valuations were low. But really, as you said, the generalists weren't really getting into this space. All the big gold funds have been blown up in the bear market, and it just took a while to get going. But actually, I think the secular bull market in gold got going right around early 2016. So today, gold's done pretty well in the last while, and actually, it's not the first inning. We're probably in the fourth inning of the bull market, and it's had a great run. And last year, finally, gold equities had a tremendous run too, but the market favored large scale, and it did that because First of all, there's a lot of dumb money in this space. All the ETF money and the robot investors, they're passive investors. They don't think. They just invest on computer models and so on, or because they have to if they're in the ETF and people buy the ETF or sell the ETF. There's nothing to do with value there. And so that's quite a difference between, 10 years ago. And you have to build companies that take advantage of the markets like they are today. So that's what we've done with Equinox Gold. And Pan American's already there. These are companies that Pan American trades $60 or $70 million of stock every day. And so it's in all the big indexes, and it gets value for that. And Equinox Gold is getting there this year. It's going to be into a whole bunch of the indexes this year, and that's very important. But so I believe that the gold market still has lots of room to go. The fundamentals are fabulous. I don't think in my whole career I've seen such a great macro environment for gold. So I see gold shooting through the previous highs of 1900. I don't know if it's going to be in 2020 or 21, but it's not going to take too long. There's so much money that's being printed. The big markets are hitting records every day. That's not going to last. Inflation's low, but it's going to blow up one of these days, or the U.S. dollar is going to devalue, and all of those are very, very positive for gold. And so a little bit of money is coming out of the major markets today by people who are a little worried about them blowing up, rightfully so, in my opinion. But there's so much money printed. The major markets are still going to have a party until it's over. Nobody's going to know when it's over. But when it's over, you know what's going to happen? Everything is going to go down, including gold and gold equities. But gold equities and gold will probably bounce back more quickly than anything else. It's a very good defensive play right now. It's a very good bit of insurance. And quite frankly, I see in 2020 both markets doing well. I think gold's going to do well because a little bit of money into gold from the generalist investors or anyone for that matter is actually going to make a big difference because gold is such a tiny market relative to the big markets. And yet the big markets are still probably going to do quite well in this election year because, the world is still inflating the money supply. And some of that is going into assets like equities and bonds. And, they're just likely to keep going higher as long as governments keep printing money. So I'm kind of bullish on everything right now. And in that environment, gold equities should do better. But again, it's not the juniors. The juniors, I don't see a mania in juniors yet. It's likely to happen kind of at the end of the cycle when the major companies are trading at ridiculous premiums by people who just think gold's going to keep going up forever. And there'll be some investors who want to go down market into the smaller space, the less liquid, but the much more volatile space, which is the juniors. Likely to be pretty good for gold juniors. It's not there yet, but it's kind of coming. You can just kind of feel it. It's just starting to happen. Juniors now are financing more easily. A company I'm involved with called Osino just did a $10 or $11 million financing in public markets at pretty much the market price. And that would have been very difficult for them a year ago. So I can see things just starting to change for the juniors in a positive way. But I still think, given the fact that the market has just left them behind, for reasons I mentioned, I think they're going to struggle for a while. And then all of a sudden, I think there will be some kind of mania that probably will represent something that'll be close to the top of the market.
Very good. Okay, well, let's talk a little bit about some books that have helped you throughout your career. Have there been any books that have made you smarter as an investor or company builder or have given you an edge of some kind? Can you share that with us?
I love reading. I just read all the time. I'm an obsessive reader, and I get great pleasure out of reading. But I have to say, I don't read the self-help books. I just don't do it. I like reading spy novels like Jean Le Carré and all the James Bond books, and I love reading history books of the Second World War, First World War, Civil War. I mean, I love reading about history and how the world works, and I'm a great geography hound, so I love reading travel logs and travel books. I have a dear friend who lives on the island I live with in Vancouver named Wade Davis, who has this incredible, beautiful way of writing. And he wrote this amazing book called Into the Silence about Mallory's climb up Everest back in the 1920s. And I went with him to Tibet, and we traveled right to the footsteps of Mallory, right below Mount Everest. And on the original trek that these guys did. And it was just so exciting and interesting. So I read a lot. I love history. I love geography. Whether it's informed much of how I work and what I do, who knows? But I just get tremendous pleasure out of books, and I really can't single one out. I mean, I read everything from finance books to history books to lots and lots of fiction. It's all very rewarding. I'm reading a book right now about Potosí, the history of this great silver mining town in Bolivia called Potosí. And I probably have 4 books going at the same time. So, I've got a couple of friends who are writers as well, and I try to read all of what they write. And that, it takes time, but I just get so much enjoyment out of it. I'm just one of those sort of print hounds.
Excellent. Okay, as we begin to wrap up, Ross, is there anything you would do again if you could start your career differently? What would you wish you'd perhaps learned earlier in your career?
Norm Keevil, who's the chair of tech, wrote kind of an autobiography called Never Rest on Your Oars, O-R-E-S. It's a book about tech and the foundation, the growth of this great mining company based in Vancouver. I've known Norm really for 40 years, I think. And, he wrote this book about the lessons he learned in his life. And I wish I'd learned that. I wish I'd read that when I was, say 30 or 25, because he explained things that had worked for them and what hadn't worked for them. And I can say the same thing. There's been a lot of things that have worked and a lot of things that haven't worked. And I just don't know that there's time to go through them enough. But certainly, working with good people is one lesson that's really important. I had a partner, lucky enough to have a partner in my first company, John Wright, who was just a dream to work with. He did all the operations. I did all the promotion and the money raising. It was a partnership made in heaven, and it just helped everything I did. Focus on scale. I made some big mistakes in my first company of working really on small projects. You just can't make money on small projects. They're all the hassle of big ones and none of the upside. And that was a lesson I learned early on. Number 3 would be, you can't focus too much on one deal because you can get blown up in this business. There's so much risk in mining that you never know what's going to happen. And so I dealt with that by having a diversified approach, having multiple assets in multiple places. And that's worked for me. It reduces overall risk and opportunity for a greater reward. And I probably had 30 exploration projects in my first company. And out of the 30, all of a sudden, we made a discovery that became a mine. And that one was the reason that Hecla bought my company, and I was able to get my first, quite frankly, fortune. For me at the time, I started with no money at all. I made about $10 million in my first company, which is a huge amount of money to me. And it allowed me to build Pan American quickly and not as riskily as going out to investors begging for money. I could put my own money in. So those are little things that I guess I learned in that first company. But I have to say, I've just been a ridiculously lucky person. Luck has favored me and again, and I've been in the right place at the right time, working with a great team of people who just luckily came into my life, having a personal life that was lucky, and it's all, being in the right place at the right time. It's really been part of my success, I have to say.
Excellent. Well, it's been a pleasure having you on the show, Ross. Many thanks for your time today.
Oh, my pleasure.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?